Okay, welcome. I want to talk about Bitcoin or crypto ETFs, particularly BITO. BITO. Mainly because, again, it's a misconception about what BITO is. So I really hope my sound is better. I've got a mic thingy right here because I hear from some people that they can't hear me when I'm in the office. So hopefully this is picking up the sound and hopefully you can hear me. Anyway, so BITO. What is it? It was the first Bitcoin ETF. Now, how it could launch before a Bitcoin ETF could be signed off by the SEC. How did they do that? BITO used the futures market, so they traded the futures and not Bitcoin. That is how they got round it, and that's how they were like first to market. And people are still in BITO. And as usual, my gripe is with the dividend, because BITO, the way it's set up, it pays out a large amount in its yield. And we'll look into that in a sec. But I want to let you know, it is not free money. And now that the real ETFs of Bitcoin are out there, ones like IBIT, DeFi, HODL, there's a whole load. Generally, IBIT, run by BlackRock, is the best because it has the lowest expense ratio. And HODL is actually pretty good, but again, we'll look into that in a sec. And what they do is actually buy Bitcoin. Once the SEC approved it, they were able to buy it. So, as with all these things, a lot of people like skip over like the knowledge facts. They see BITO, and that it churns out this yield, and they think that it's somehow free money and that it's better than IBIT. We'll look into it, and I'll just step you through and show you that since the real ETFs have come about, you really need to step away from BITO. Anyway, let's have a quick look. So if we jump onto TradingView, go to Bitcoin. I apologize for the speed at which this is loading. There we go. Okay, now, so that's what we're trying to replicate. So for me, I've got a slight issue with buying Bitcoin direct. So what's happened is the whole on-chain experience for me has not been smooth. So if you go onto some of the direct exchanges, you have this whole 12-word password. You have this whole thing going on. You have cold storage wallets. You have all this, and I really don't. I don't know if like you want that. For me, I really didn't want 12 words I need to remember to get out my Bitcoin. I keep hearing stories of people forgetting their 12 words. One guy forgot his password to be able to log in to enter his 12 words, and he bought Bitcoin back in 2013. So I hate to think how much he's forgotten. And I keep hearing about people making the whole on-chain thing. For me, now that you can do it via an ETF, I kind of find it more appealing. So anyway, I've been when BITO came out, I was one of the first, I think, to buy it, the ETF. It's based on the futures, because in the UK at the time, if you opened up a crypto account with like Coinbase or Kraken or any of these exchanges, they made it so difficult. You could only deposit like 2,000 quid at a time. You had 1,000 hurdles to jump over. Logging in was difficult. Purchasing any amount of like, if you can only do, I think I could only deposit like something like 2,000 a month. So they just made it like impossible if you're a UK like resident when you prove your like address. That was at that moment I was UK, had a UK address. So immediately I found this exchange where BITO on the exchange where you can just buy it and replicates Bitcoin. Perfect. I don't need to jump over all these hurdles for Coinbase or Kraken. I went on to Kraken, opened up an account, and I had to wait 2 weeks, and I could only deposit something like £200. It was insane. So immediately, if they're able to restrict you on the way in, I fear that they can restrict you on the way out. So immediately, my warning signs are going off that going on chain and going through these exchanges was kind of not for me. I don't know if you're in the same boat as me. So what I did was buy BITO. There's a whole. This is where the ETF is set up. You can read all about it. It tracks pretty nicely. It does have quite a high expense ratio. It does have this payment. So again, I use Market Chameleon. And yeah, the forward dividend yield is 53%, but that's not free money. It's not free money. When you compare it, as usual, I go to totalreturns.com. It is literally tracking Bitcoin. So don't think that yield is anything extra. And remember, you will pay the withholding tax, 15%, or in my case, 30%. So you will have a drag and the expense ratio. So the best performing on here, I've put on BITO, the first ETF that was using the futures, and then IBIT that actually now buys Bitcoin, DeFi which buys Bitcoin. It's just run by a different ETF provider. So you've got ProShares, iShares, Tidal, and VanEck. These are just the 4 I've grabbed. They're just different providers, but they're all Bitcoin ETFs, hence why they track so consistently. When you look down to the returns, you're pretty close. You're 102% on BITO, which is the worst because of the drag. 119% return on IBIT, 108 on DeFi, 120 on HODL. So for me, the two winners are IBIT and HODL. They give out probably their cost base and the way they've structured the ETF is working the best. And yet people will always fall foul of this dividend yield on BITO, but seriously, it is just replicating Bitcoin. You are no better off. Anyway, so once BITO, and the good thing about BITO was that it had an options market, so I could trade my option strategy on Bitcoin effectively, which was a total godsend. So for a long time, I was doing a lot of options trading on that BITO ETF. Now there's IBIT, I have moved over to that because I don't want that drag. One, the expense ratio for the fund, and two, the drag they have on the cash payments, the dividend you get out. So it's an interesting history, the whole ETF market around Bitcoin. The Winklevoss twins. If you don't know about the Winklevoss twins, they were the guys that they came up with the idea of Facebook, and it was the Mark Zuckerberg, that I believe they stole his idea. They both kind of came up. Zuckerberg had some kind of campus thing, but it was really the Winklevoss genius that came up with Facebook. Just Zuckerberg was able to execute. Anyway, they wanted to do an ETF for Bitcoin, but kept getting rejected. And BITO got round it by using the futures market, so they didn't have to jump the same hurdles. Really clever, really smart play. So yeah, for me, I like it because I haven't got the hassle of a crypto wallet, all the private keys, the sketchy exchanges. I also wonder now if, say someone knows that you hold, I don't know, 1,000 Bitcoin, and they know that you'll have it on a cold wallet, maybe because you've made a YouTube video, are you now a target? And if they get hold of you, because you hear about crypto bros that are getting abducted and then tortured to release their passwords, because once they have that cold wallet and they know your logins, they can effectively take your Bitcoin. Whereas if you bought IBIT, the Bitcoin ETF, and it's in your broker will only remit funds to your bank account. So even if they came and tortured you and whatever, and they made you remit funds, it'd go to your bank account. So I'm preferring to be buying Bitcoin through all the ETFs. I know the crypto bros will hate me because that's not the point. You want to carry your asset on your stick and be able to go anywhere in the world and do all that kind of stuff. I just think over time now, as we flip through the Bitcoin, once the governments get their teeth into it, it'll just be ratcheted in. The squid has it, the octopus has it, and it's just going to suck the blood out of it. So I'm probably wrong, and maybe I should have a whole load on a stick, but I just haven't done it. I'm just buying the stuff that I can through my broker. And I guess the reason for the creation of BITO was that wealth managers, hedge funds, I don't know if hedge funds would ever got the mandate to buy Bitcoin. Maybe some that had a really broad mandate would have been able to. So this was a way for them to use client money to buy Bitcoin, because there is no way they'd have been allowed to go buying real Bitcoin with the whole 12 password thing. You can't do that if you're hedge fund manager. So BITO made it available for everyone else, a bit like MicroStrategy. Once they started buying Bitcoin and doing the convertible bonds, as far as I'm aware, the main genius behind that move was that people that couldn't buy stocks could get Bitcoin exposure via the MicroStrategy bond. And I think some people haven't really twigged on that. And that's why that is so popular, because it makes no sense to buy the bond with no... the bond promises is missing some major things. I can't remember off the top of my head what they are now. I'm not really a bond expert. I was about to say I'm a stock expert. I'm not that either. But the people were buying the bond to get Bitcoin exposure when they could only trade bonds. I hope that makes sense. Anyway, so the IBIT ETF, I think it's up to $1 billion under management now. It's probably way past that now. I've read somewhere that it's 52 billion it got to 52 billion under management by early 2025. And just remember, BITO's management fee is nearly 1%. So that drag effect you see here for the red line is only going to get greater because of their costs. And as people come out of BITO, which they will, it'll do more and more damage to their returns. So where do we go next with the ETFs? Well, ETH ETF is now out, and Solana ETF is soon to come out. For me, I think I will be buying more of the ETFs when they get approved. For me, it's like the rubber stamp that Bitcoin's a thing. Once it's in an ETF, boom, Bitcoin is a thing. ETH, once it's got the ETF, which it has now, boom, it is now a thing. And Solana, boom, it's a thing. I think for me, it's the final gold stamp that it's like if you're buying a company, for me, the hurdle height is around 5 billion in market cap. Once a crypto, at this current juncture, the way the SEC approves stuff, once they're happy to make something an ETF, for me, that's the final rubber stamp that you can buy it. I'm not, unlike a lot of people, I haven't gone down into the altcoins, anything outside. I'm in a lot of mining stocks, crypto mining stocks, but I haven't gone down into the lower ranks of the crypto coins. Basically, Bitcoin is a 66% of all crypto. So outside of that, you're really there's not that much outside of that, considering there's, I think, is it 10,000 different crypto coins? So all the rest make up really, really small amounts. So I'll be sure to keep to probably the ones that just get approved. I do like XRP for some reason, but that hasn't been approved yet as an ETF. It's something about that XRP could challenge SWIFT payments. So I'm keen on it for that reason. But I do see a lot of guys on the internet just totally pumping XRP. And when that happens and the price isn't reacting accordingly, it kind of makes you question whether it will be a thing or not. Anyway, the chatter now, I don't know, we're in July 2025. Lots of chatter now about stable coins. So that seems to be where the hot take is, that companies will launch their own stable coin. Exchanges are talking about tokenizing things and putting them to stable coins. That seems to be where all the work is going on in the background behind all this. But again, we've spoken about it before. Bitcoin for me is gold, the effective digital gold. ETH for me is potentially the digital silver because it has a lot of on-chain use. And XRP potentially will take over from SWIFT, just make quicker payments. And outside of that, I really don't know. Solana, I just heard people were doing a lot more work with Solana than they were with ETH, but that seems to swing from week to week on which one is more popular. Outside that, really, I hear nothing. Again, I will be probably just concentrating on stuff I can buy through my broker. Using these exchanges, I just haven't got to the faith in it and too many bad stories. So that's my chat. I hope that's useful. Just made some clarity on the BITO because there is a lot of talk about it and people talk about the yield as if it's free money. It's not. And if you're wondering what other ETFs there are, outside of IBIT, the Fidelity has a Bitcoin ETF. It's FBTC is the ticker. ARK made one. ARKB was their Bitcoin ETF. Bitwise, BITB, that's their ETF. Invesco made a ETF, BTCO. Because some people have like a preference, and especially if their provider is Invesco. My friend, for example, has a Vanguard account, and obviously only the Vanguard funds are available. So Valkyrie does a Bitcoin ETF, BRRR is the ticker. Franklin does one, EZBC. Wisdom Tree, BTCW. I've said VanEck, which is the HODL one, and Hashdex is the DeFi one. So that's the history of BITO, and obviously, as I've explained, it's smart now to move from BITO to a more up-to-date ETF, and that the BITO is a historical one that really, I'm not going to say it should close, but it's probably going to lose assets under management because of the drag effect. So just watch out for that. I hope that's useful. Don't be fooled by the yield, and good luck out there.